Welcome to the Delaware Mortgage Rate Weekly Mortgage Market Update for the week of December 15th, 2014. Hello, I'm John Thomas with Primary Residential Mortgage, here to give you your update. Well, last week was definitely kind to Delaware mortgage rates. They were able to move back to the lows for the 2014. If you take a look at the bond chart on the screen, you can see mortgage bonds were selling off until last Friday, where it looks like they hit a level of support, and we recommended last Monday on floating, which was a good call. You can see the big green candle up there on Monday, and then the rest of the week we did move higher, and then Friday we hit the all-time high for the year. Now we're right at a tough ceiling of resistance. It's going to be tough to break through that. So with that in mind, we're going to recommend locking your Delaware mortgage rate to start the week if you're closing in the next 30 to 45 days. Lock it in, take these great low rates. Now if you're closing 60, 90 days out, you could float, but if we don't move higher above this level of resistance, we will be turned lower, and Delaware mortgage rates will move higher as the bond sells off. So we would quickly switch to a locking stance long term as well. But short term, lock it up, take advantage of these great rates for a purchase or a refinance. Now if we dig into the economic news, last week we saw the Producer Price Index, the PPI release. That's a measure of inflation at the wholesale level. That came in very tame. It dropped. It was actually negative 0.2%, so it came in lower. So the year-over-year headline is 1.5%. Very tame inflation at the wholesale level, mainly because of the price of oil has been dropping. So that's definitely good news for mortgage bonds. Then we saw consumer sentiment surge higher to 93.8. That's the highest level since January 2007. Consumers are feeling very good about the outlook on the economy, and we saw that with the retail sales report for November 2014. That jumped higher by 0.7%. That's up from 0.5% for October, and way above expectations of 0.4%. So consumers opened their wallets in November and were doing some good shopping, which helped retail sales. And then Thursday, we saw the release of the weekly initial jobless claims by the Labor Department. That came in at 294,000 claims, down 3,000 claims from the previous week. And that's another good report below 300,000 claims. Remember, that's the breaking point. If we go above 300,000, that's bad news for the Labor Department. So good news there. And then in other economic news, oil hit $56 a barrel last week. That's unbelievably low, and that's really helping consumers save money at the gas pump. But there is a negative effect on that. The low price of oil is actually going to be a negative drag on the economy long term, because a lot of the jobs have been in the oil sector. We've already saw layoffs from Halliburton and BP laying off people because the price of oil is so low. And then what that's going to do, it's going to shut down oil production, oil exploration. Some people think OPEC is actually keeping their production going, flooding the market to get the price lower, because they're trying to shut down these other oil producers that are more expensive, like oil fracking in the U.S. So if they can shut down that production, it doesn't come right back online when the price of oil goes up. And they're going to shut down these oil rigs, and that's going to basically remove some producers from the market, and then the price of oil will go back up, and they'll be back to making money. So we'll have to keep an eye on that, but long-term low oil prices can have a negative effect on the economy and jobs in the oil sector. Then we did see in the housing news, Fannie Mae released some big news. They are bringing back their 97% loan-to-value for their conventional loan program for first-time home buyers only, or for people that need to refinance that currently have a Fannie Mae-owned loan. So we were at 5% down, so they've brought that back to only 3% down. You can get all the information on that whole program, what the guidelines are, and see if you qualify in the blog, DelawareMortgageLoans.net. We have a blog on the 97% program with all the guidelines. So that's great news from Fannie Mae. And then in the local news, the next free first-time homebuyer seminar is in Dover, and that is Saturday, January 10th. That's the new year, first one of the new year, from 10 a.m. to noon at the Dover Holiday Inn. And then the next one in Newark is Saturday, January 17th from 10 a.m. to noon at the Christiana Hilton Hotel. You can register for either one of those events by giving us a call in the office at 302-703-0727 or online, www.DelawareHomebuyerSeminar.com. Look forward to seeing you guys next week.